Is this the end of traditional real estate investing? These brothers went from making no money to $667,000 a month, taking advantage of it.
I had a pregnant wife at home and I hadn't made any real money in years.
And you found a repeatable way to double your money on every single deal in less than 60 days?
You're talking about a $25,000 to $100,000 profit per deal. We've flipped land in over 40 states without ever seeing it.
I'm here to find out how they went from nothing to making over $8 million a year. So how much do you need to start?
As little as a few $1,000s.
And nearly every entrepreneur fails because of this one simple mistake.
Plus the biggest lesson they learned from spending $250,000 on direct mail. All right, Dan, Ron, tell us, what are we walking into and how did you turn dirt into a $16 million empire?
Exactly. So we have been flipping vacant land for about 6 years, and this is one of our first properties that we're standing on. And this is actually the only property that we have ever bought and hold. This land was about 50 minutes from where we live. So Dan and I were thinking like, we should just keep this land. We bought this land for about $100,000. At the time, it was worth like $190,000. But overall, like how we built this empire was by flipping vacant land all around the country, unused, unwanted, rural vacant land, then selling it on the market for market value or sometimes above.
Out of all the business models you guys have focused on or could have focused on, how did you land on this one? What's your advice to our viewers?
So for me, I came from e-commerce. I had a drop shipping store. I had Amazon FBA. I'd had a lot of different businesses before that. And my whole goal was to get out of my 9-to-5. And through those processes, I've seen a lot of the pros and cons of all these different business models that people are looking into. And then one of my mentors, Joe and Mike Brusca, they told me about land and how it's easy to acquire land under market value. So I went to Ron, I was like, hey, these guys are buying and flipping land. My mentors are doing it. And you're talking about a $25,000 to $100,000 ticket profit per deal. Wow. Me in e-commerce, that's what like you're making in multiple months. My margins were 10% net essentially when I was selling electric bikes. And I saw this, I'm like, we just need to figure out how to buy a property for $50,000, sell it for $100,000, and we just need one of those to make 50 grand. Like that's successful in e-commerce for a whole year. And I just saw the potential in the business model.
You know how the entrepreneurs get stuck, or people in a 9-to-5 think about, well, what business do I pursue? They get stuck in this paralysis by analysis, right? Did you guys feel like you're in there too, or were, and the mentor helped you get out of it? What's your advice?
I've been stuck in that before. When I was getting into drop shipping, that's how I felt. But my advice to anyone else is just pick something, go with it. For the most part, they all work to an extent, right? They're business models. Other people are doing it full time and successful at it. Why can't I? So that's how I started looking at it, instead of like looking at the cons of why it won't work, all of this.
Right.
How can I make it work? How can we make it work? And I approached Ron with this business model, and we just really believed in it from the start.
Let's go check out that feature that you guys talked about. You said you were building upon and still working on it, right?
Absolutely.
Yep.
All right, let's go take a look.
Let's do it.
So this is actually a work in progress pond, right?
Right, yeah.
Middle of it. We're at the bottom. Water will be where we...
This is the deepest. This is where we're going to be. You can see the ledge right here. This is 20 feet below. So this would be the deepest point about.
Just run off from the mountain, we'll fill this thing up.
Yeah, so we hope. That's the plan.
What's the early days look like? Talk to us a little bit about the back end story of you guys starting the business, what you guys were doing.
Yeah, I was 9-to-5 working sales for building material. So this was actually my territory, Northern Kentucky and Cincinnati Metro. So I covered like 5 different counties in this area, and I was just driving 700 to 1,000 miles a week. So I would just listen to podcasts, right? And that's how I got into entrepreneurship in general. So ever since starting my 9-to-5, it was always, what's the quickest way to get out?
Yeah, for me, I was coaching college basketball, and like I just wanted a way out. I didn't want to work for someone else. That was my biggest thing. It's like I did not want to have to go get a job. Early days on, like it was a lot of grinding with the phone calls, mail, all these different things. But it was fun, like the grind at the beginning, getting those first few deals. It was exciting.
And how quickly into the new business did you guys leave the 9-to-5 totally?
We started in December, I left in February, and then we went 5 months without getting one deal, essentially, until April. But we believed in it so heavily, we were getting the leads, we knew it was coming, we were like, how do we just get one deal?
After that season ended in February, probably around Dan, we went full in, like we were doing it every single day, 8 hours, 9 hours a day. We started hiring people. So yeah, it was probably 3-4 months in when we knew like this is working.
This is one of the few properties that we're standing on that you actually own. The interesting fact is you buy 40 plus states. Talk to us about some of the pillars on how you achieve that.
Yeah, so you got to do your due diligence remotely. So you have a few different options. You have realtors, you have drone photography, and you have just satellite images and softwares, right? So we use the land portal as software to really look at the satellite, the slope, the wetlands, the AI data that it shows, and we can get a good baseline of what's going on in the land just from that, right? And then you get a drone photographer out there, and we have a set of questions. We just copy and paste. We make sure he gets ground pictures, he's getting photos from above. If there's some question areas, like it's wet over there, hey, get some photos, how bad is it? You know, is there good access off the road? Things like that, they do due diligence for us. Then lastly, if you have a realtor relationship, they can go there, give you all the feedback, and those are our 3 sources right there.
Can we go check out more of the property's features, highlights, anything?
Let's do it.
Let's do it.
I'll follow you. So what's special about this property as opposed to the thousands of other deals that you guys have done?
I mean, the main thing, it's an hour away from where we live. So like this is the closest we've ever bought a property. And the thing about land is it appreciates pretty much year over year. It's not as volatile as houses. It's going to go up 8% every year for the next 30 years.
Okay. Do you mind sharing the details of the deal? What did you guys pay for it? How did it come about? Anything interesting?
Yeah, so the guy we bought it from paid $70,000 for it, and that was like, he wholesaled it to us, and we bought it from an assignment because we really wanted this property, and he wanted to buy and flip it. I'm like, listen, we want this property, what do you need for it, essentially? And at the time it was worth probably about 180 or so. So he had it under contract for 70, we paid him $30,000 cash, so 100 all in, and got a good deal on it. The one we're going to down the road's listed for 250, about the same size, but we think it's probably anywhere 250 to 300.
Guys, over 87% of you who are watching are not yet subscribed. So if you don't want to miss these incredible entrepreneurs sharing all the insights, all the secrets, everything you need to be successful, do us a huge favor, hit that like and subscribe button. We greatly appreciate it. All right, so you said you consistently double your money on every deal. Can you walk us through what the deals look like these days across 40 states?
On average, it buy for 25, sell for about 50. And like 5 acres was probably our median acreage we're buying. That being said, if you look on the last year to 2 years, it's been closer to buy for 100, sell for 200, buy for 150, sell for 300. We've been doing much more of those. But for the first 3-4 years, 25,000 was the average acquisition cost.
Okay. Is the spread, the income, way bigger on the bigger deals?
It's much bigger and it's the same amount of work. But our goal was just to get out of our jobs at first, and we knew we could do that by buying $25,000 properties and sell them for 50, and we do, you know, a lot of those, 10 of those a month. We're in really good shape. Can we do the same exact business model for more expensive deals was the big question. And one year we just put it on our radars. It's like, we're only doing big deals. That's what we're really focusing on. And that deal, we got a ton of 6-figure deals.
Talk to us about the average time on a deal, right? You mentioned 14-day closes. What about due diligence on raw land? That's a big risk. How do you guys decide between risk, reward, etc.?
Yeah, so we have like the marketing aspect, which we're going to get a deal or two from every marketing campaign. That might take an hour, 2 hours. Then you have the leads calling you back, essentially. So you send the marketing, you have leads calling you back. If it's a single lead, you might talk to them maybe 30 minutes, 45 minutes, all in all. Due diligence is going to take an hour maybe. As you get more experience, it doesn't take that long.
Really?
You are calling the county to see what restrictions, you're reviewing it on a computer, and then you're just making sure the price makes sense, essentially. Then you're scheduling drone. But hour and a half, 2 hours maybe for due diligence. But 5 hours maybe for a deal, and then we're talking about a $30,000, $40,000, $50,000 potential profit. It's not a ton of time. Once you do it over and over, you're gonna get that time per deal way down, 3 to 5 hours probably.
So from first conversation to close, 14 days, 30 days, 60, or on average, what does that look like?
Probably like 3 weeks. I'd say 3 weeks on average for those. We're really aggressive with like getting to the closing table fast. And every day that you haven't paid the seller hasn't signed the deed, it's a day that the seller could back out or something could fall apart on the deal. So we're really quick with everything.
You still have a contingency though to back out.
We're offering you a really quick close. Like our due diligence period is anytime really before closing. Yeah, we'd have to pay the title company. We'll have some earnest money down with the seller that they can potentially keep. So yeah, there are contingencies in there where if we find something from the drone photographer, we can back out. And the drone photographer has helped us quite a few times, like back out of deals last minute of stuff we couldn't see on the computer.
Mm-hmm. And the hardest thing is, and the main thing we're doing there is analyzing the price, because when you're in rural America like this property, we have a comp right there right now for sale, so we kind of know, but a lot of times 10, 20 miles, you might not have any comps.
Right.
You might have to go back 18 months. So it's like a big question of, you try to get the closest to your property in terms of size, distance, all of that, but the main thing and the biggest challenge of the business is actually comping land.
How important is the assessed value then? How much do you depend on that?
It depends on the area. Yeah, virtually not at all.
It might be $14,000.
Oh, yeah.
And then we're getting taxed like $20 a year on something like this. And they try to keep the assessed value of vacant land really low, and it's just not accurate.
But that's in Kentucky. Some states are different with how they appraise.
The closer you get to cities, the better that assessed value because they want their taxes, everything like that. Here, they just don't want people like getting foreclosed on. Like they don't want to deal with that kind of stuff. They want development. So vacant land isn't that hard to keep. It's not expensive to keep.
So where are we going next, guys?
Gonna go up to Cincinnati to our office and check out our operations up there.
Okay, let's go check it out.
Do it.
Ron and Daniel have a saying, when it comes to real estate investing, you make your money when you buy, not when you sell. Why? Because if you're not thinking 10 steps ahead with your money, that profit can disappear. Mismanaged cash flow and booking errors can turn your greatest financial asset into your worst nightmare. That's why real estate investors, big and small, are turning to Baselane, the modern integrated banking and booking platform built specifically for real estate investors. Baselane brings all of your real estate finances into one convenient hub. With automated rent collection, property-specific banking, and AI-powered bookkeeping, Baselane gives you clarity like never before. So you can see exactly what's happening across all your properties and make smarter decisions. There are no hidden fees or minimum balances, just the tools you need to protect and grow your business. If you think you can just wing it when it comes to managing real estate finances, you're already doomed. Don't gamble with your money. Safeguard it with Baselane. Head to baselane.com/UpFlip and get a $100 bonus when you fund your account. Get started today.
This is your Cincinnati office.
It is.
How long have you guys been in this awesome space?
Been here about 18 months or so.
Yeah, we got a podcast studio here, a couple offices, conference room. So this half of it used to be our podcast room just here. There's a wall right here. They just took this out a few months ago, and we opened it up to make a bigger podcast space, to put 2 desks in here and make it really one collaborative idea. Ron and I sit down, have a podcast, Ben's recording, Marco's in here. It's just really collaborative.
What was the first deal, and how soon did the second, third, fourth happen, and so on?
Yeah, so our first deal was actually right here in Weakley County, Tennessee. This was 5 acres right here.
So a bunch of trash.
A bunch of trash. That's how we negotiated them down from $15,000 to $5,000. So we bought this deal for $5,000, sold it for $15,000 in 2 days on Facebook Marketplace.
No way.
Took a little bit to close, obviously, and all that, but we didn't get a deal from December to April. And then April, we got 6 deals. And then from April to December, we had 48 deals that year. Whoa. That was our first year in it. So it was really big to just show the marketing compounds on itself. You're getting more calls, you're getting more comfortable, you have more leads out there. It just starts compounding. It took us 5 months to get 1 deal. Then that same month, we got 6 right there.
All right, guys, blitz time with Dan and Ron. You guys ready?
Yep.
How do you sell land that has been landlocked from access routes? Landlocked due to nearby development, something like that.
Anytime a property is landlocked, 1, you have to sell it way under market value. 2, you find access. And that's what we typically do. We call the neighbors and we try to buy access from them.
What's your favorite UpFlip episode and why?
You like the pooper scooper one.
Yeah, the pooper scooper one's interesting, just like an absurd story. That's probably my favorite.
Okay. So what's the best purchase you've ever made under $100?
This whoop, honestly.
Yeah?
That under $100?
Yeah, it's like 20 bucks.
For me, books, learning, that kind of stuff.
What's the biggest check you've ever cashed and how did it feel?
About $500,000, and it was adrenaline rush. It was exciting.
What's the most bizarre piece of property you've ever considered?
We've seen some rural land, but rural Mississippi land, like the middle of nowhere, no cities, no gas stations, nothing nearby. We've actually bought a few of those properties. It was pretty wild.
Did they pan out?
Yeah, we've made some money on them.
It's just tough because it takes so long to sell.
To buy right.
Okay. If you could buy land in any country in the world, what would it be and why? Where would it be and why?
I think it would be like southern France. It's not that hard to get to. You got a direct flight to Paris, and then it's beautiful rural France.
Okay. I like Sweden, Switzerland, like the prairie and that stuff.
Yeah.
Mountains, yeah.
All right, if your business was a movie, which would it be?
I thought of like, in my mind, I like war movies personally, and shows. So like Band of Brothers, just seeing like they start, off the coast and they're working their way into Europe and just seeing the progression of how they're defeating the enemy throughout it. I love that because that's kind of business in general.
There you go. It is a battle.
That's a wrap. When the first deal started coming in, how much profit did you guys take in?
personally versus just reinvesting it, right? Talk about the delayed gratification aspect for entrepreneurs and how important that is.
You paying yourself early can really delay the success of your business. We put 100% of it back into the business, back into marketing, because marketing is the fuel for growing that business. Like one $10,000 deal doesn't do anything for us personally. And so we need to turn this into much more. So 100% back into marketing, back into the business. The delayed gratification, I think, helped us scale faster.
Yeah, you're just putting more fuel into the fire. The fire's ignited. We got 6 deals in April. We're rolling, right? We're just like put all of our money in. Any single dollar we had, let's put it right back in. Let's buy more deals, more marketing. And that's how we got 48 more deals that year.
What is the one mistake that most entrepreneurs make, 99% of them?
It's focused on the things that don't move the needle. Focus on things that just don't drive the business forward. As a business owner, you have to figure out what drives your business. And you don't know necessarily at first, but for us in land investing, it was the marketing, choosing a market, and just getting your mail and your marketing out, because that's how you get leads, right? That was the most important thing in this business. But every business is a little bit different with what drives the business forward. Some people are so focused on making their website look so pretty and all these other small things that don't really increase sales, right? You just have to look at what's going to increase your sales and profitability and focus on those things.
How do you guys manage marketing with every other hat that you have to wear on early on as a business owner?
I think the biggest thing is just being on a schedule. We've said it a few times, reiterating it, is just being on a marketing schedule. So for example, sending it, I used to like to send my mail every Monday morning before I did anything else. So my mail goes out, whether it's 2,000, 3,000, 5,000 mailers every single Monday, and that keeps consistent deal flow. And it's just, you need to do this. It is such an important part of the business. You just cannot do anything else that Monday, or I couldn't do anything else that Monday until I got the marketing out.
It's just about the awareness of what drives the business forward, and knowing what drives it forward. We know we have to put all our emphasis on that, so you can't miss it, or else, like I said, the business just stops.
What do you guys use to identify properties, analyze them? Give us an example. What do you use?
We use Land Portal for almost everything we do. Building a list, reviewing the deal and the due diligence on it, sending out marketing, things like that. But we can actually pull it up. We're going down to 44 acres here soon in Grant County, Kentucky. We can pull it up. I'll show you right now.
Yeah, so this is the 44 acres we're going down to, and on this property, you can see the slope on here. As far as contour lines, we can hit 3D and see how sloped it was. We talked about the slope, but yeah, this property, you can see how sloped it is off the road, everything like that. And that's kind of the beauty of using a software like this. We talk about computer due diligence. This is what computer due diligence looks like to us before we actually go see a property or send a drone photographer to a property. Wetlands, FEMA, you can see all the creeks, everything like that. Yeah, buildability overlay, so it's actually gonna look. So what it's gonna do is actually look for buildable spots on the land, which is all AI driven in terms of this, and it's looking for buildable spots. This is a very sloped property on this northern part.
I don't think I've found any.
Now we're going to visit, but yeah, it didn't find any buildable spots up here really.
You can see the one down here where the house is. It circled that.
Oh, it did, okay.
We're gonna go see this northern parcel though. This was actually subdivided off and sold separately. This is the 44 acres that's for sale. You can see it listed on Zillow as well here for $250,000.
Gotcha. I mean, that's one of the most important parts of what you guys do is analyzing the property, right? So having the right tools is absolutely 100%.
And it also has things like comp reports, and where it's, you go to a Zestimate for land, it's not gonna be accurate because it's developed for bedrooms, bathrooms, square feet, that type of stuff. So how many floors it has. This is for land specifically, so it looks at the features of land, the slope, the wetlands, all of that stuff, and then builds comp reports based on the data.
By the way, guys, if you want to know more about land flipping, Ron and Daniel put together a free masterclass on how to start a profitable land flipping business from scratch. So check out the link in the description to get access. All right, well, let's go check out this property, show you guys on the ground how to do a little bit of due diligence, get dirty, and get some ticks on our feet.
Exactly.
Boots on the ground, let's go.
That was quite the drive.
Yeah, let's check this property out, 44 acres here.
So this isn't your property. This is, again, what we discussed. You're looking to purchase it.
Yes,
right?
It's only a mile away from ours, same size. I know there's a pond. It's for sale for $250,000 right now. You have over 1,000 feet of road frontage here. So it comes from the peak up here, which is its highest point, dips down into a valley, and then on the other side, it comes back up to another peak where you could build on and get a little more privacy on the second peak.
You split these things up?
into more density?
We do that a lot with our investments in general. It's called minor subdivisions. So yeah, especially in rural America, there's not a ton of restrictions on how many times you can split it up. You take this 40 acres, probably make 4 10-acre parcels or do 5-acre parcels, but we do that all the time.
So what's the secret to evaluating a property's potential? Walk us through the key aspects.
Well, you want to make sure all the attributes are good. So you want the road access. You don't want it to be wet. You don't want it to be too sloped. That's my main question for this specific property. Is it too sloped? Do we have enough room to build? And then we're looking for attributes like creeks, ponds, and just seeing what stands out. Making sure it's in a desirable area is the biggest thing. When you list it and when you list it for sale, is it going to sell for the price you think? That's the biggest thing we want to look at. And we want to make sure there's no defects. Like you have a torn down barn here, is that going to hurt or help a future buyer? So we look at things like that.
So once you've identified a possible deal, what are the important next steps?
First, you do your due diligence, making sure there's no crazy defects. But the biggest thing is just checking the price of the land. Like, what are you going to buy it for and what can you sell it for? And you want there to be plenty of margin, because if there are things you didn't catch or the market's not as strong as you thought, you want to be able to drop the price and get more aggressive and still make money. So the biggest thing is comping the land, checking the attributes, just making sure it's going to sell.
How do you get the seller on board though, Dan? I mean, he may think it's worth $300,000.
It's tough. He wants quick cash or he doesn't want quick cash. Like, we have an offer for them. It's got to be the right seller. We do things like double close if they want, 80% of market value. Maybe they want 220 grand on a $300,000 property. We can work that out and get 90 to 120 days of the ability to market it and talk to them and do that. We do that. We do offer that. But our number one pitch is I want to buy that for 160,000, sell it for 300,000. You want the quick cash now, 14 days, or do you want it in 90 days and let me market it?
When you're doing an offer higher, are you essentially doing a novation where you sign a contract and then get the opportunity to market it?
Yes, exactly. And that's like, and then we'll just double close on the same day, line up a future buyer. And that's when we're very transparent with the sellers. Like, listen, you didn't want the 14-day cash. I can still pay you 150 grand for that property. I'm happy to do that right now. I'd rather do that. Or give me 120 days, we'll get an ovation, and I would try to line something up so I can get you that 220,000 you're looking for.
So what part of the process do people mostly get stuck on?
Yeah, so analyzing the price of the property, it's difficult with land because there aren't always comps right nearby. So they might come up with a price of, they think it's worth $300,000, seller wants $250,000. Like, you got to go back to the seller and try to negotiate. So many people get cold feet around negotiating with the seller, telling the seller like, I can't offer you that, I can offer you $170,000. It's a hard conversation, but being willing to have those conversations makes you so much more money in the long run.
All right, do you guys mind if we go check out the barn?
Let's go take a look.
Close? Are they okay with that?
Yeah, let's do it.
Is there anything else important that our audience needs to hear about what you're looking for at this property?
We're just making sure there's margin in the deal, essentially. So we want to make sure this property's been on the market right now for sale for about 70 days, I believe. So we want to make sure we can get it under what it's listed for, under market value, so that, when we go to sell it, we can make money. So we want a motivated seller. So we need to make sure that person on the other side who's listed this wants their money and wants it fast, and they're sick of waiting. It's been 70-something days.
Mm-hmm. Have you ever closed on a property and realized there's something really horribly wrong with it? Talk to us about that story, the lesson.
Yeah, so we bought 40 acres down in Mississippi. It was a little off the road, but it had an easement. So it had legal access to actually get back there, or that's what they told us. So we go to sell the property. We bought it for like $30,000. We go to sell it for $80,000. We have someone under contract. They're like, I want a survey first. We get the survey, and then the surveyor's like, this is broken access. This property does not have legal access. So we tried to find a way to get legal access. We couldn't figure it out. That buyer backed out for $80,000. We ended up selling it for like 35 grand. But it was something that cost us $40,000. We were told on the front end it had legal access, but once that surveyor got an official survey, we found it didn't.
So you didn't do the due diligence, didn't verify the easement.
We did.
Is that something you guys are doing now because it's going to cost you, or that's just the risk of doing what you do?
So we went through the title company and we actually got insurance on it having access. Like, they insured us, like it had access, but if we go through an insurance claim, all we do is get our money back essentially for the property, which is the same we got anyways. We don't usually get surveys before we buy properties. That would be the only way to find this out, but surveys take, like you said, 6-8 weeks, and they back up closing too much. So we trusted the title company. Unfortunately, we got burned a little bit on this one, but it was definitely a learning lesson.
How do you do due diligence remotely? What's the most important thing out of all the important pillars?
With the mistakes we've made in the past, we've really learned you got to talk to the officials in the actual counties, in the cities, talk to them about your land. You're looking for zoning restrictions. Can you put a building on it? Can you put a mobile home on it? Because there's a lot of restrictions you have in certain areas that tell you can or can't do something. And that can kill the deal, absolutely kill the deal without you even knowing, right? And then you're just looking for other things from the county and making sure you can get like septic and different utilities out there and electric. So it's more picking up the phone, calling the people in the actual area to limit your risk in the future.
Did you guys know anything about buildable land or soil when you first got started?
No, didn't know anything about dirt in general, like across the board. I knew you probably needed a flat area in my head to build on, or like something somewhat flat, but that's the extent that I knew. And then you just kind of learn and you get it, and you get properties under contract, and you're doing the due diligence yourself, just listening and watching YouTubes, and you just pick it up over time. It's not that complicated.
I remember when you called me and mentioned land flipping, like, let's do this. I remember getting on Zillow and just like filtering a land. I'm like, I don't know what I'm looking at. I remember how confused, like everything that I was looking at, because I was in Ohio, was like farmland and stuff like that. I'm like, that doesn't make sense. Like, how do you do that? Like, it's a very vivid memory for me.
What's been the biggest resource earlier on to actually get caught up and understand the business, understand the industry?
Networking, I think, was big. Like Dan said, with his mentors were really big as far as learning from them. Just there's online resources where you can review contour lines. You can look at different pieces of land, and like every day we just got a little bit better. And then after 5-6 years, like, okay, we've come a long way from where we were on that day. It's slow build, honestly. I didn't feel comfortable reviewing land after 2 months, 3 months. Like, it took 4, 5, 6, 7, 8 months to really feel confident with reviewing land.
So if you guys were starting today from scratch, zero capital, what would the first 3 steps be to get going?
First thing you do is you analyze a market, and you choose a market. Right after that, if you have no capital, you can't send out mail. Mail's expensive. Texting's even pretty expensive these days. Pick up the phone, you start calling. So you got to get a list from that area of all the property records of vacant land, which is all public data from the counties, right? You get that list and you start calling them. Then you want to acquire their land, you got to get offers in their hands. So you got to come up with a price that you're comfortable with when you're talking to them. But on that first conversation with them, once you call them, you're just trying to gauge, are they an interested seller, and is the land worth buying, essentially? And then gauge them yes or no and qualify the lead on the first step.
Who would be the biggest resources initially on, like a realtor or a title company for information? Let's say you don't have access to apps, subscriptions to get data. What are some free avenues real quick to go for?
County tax assessor has all the list. So you can call them. You should get, sometimes it depends what county you're in. Sometimes they'll send you a zip file, or like the old, I don't even know what they're called, and you can't decrypt it. But yeah,
floppy disk.
Floppy disk. This is all public records. You're in America, right? You can type in this person right now and find out their mailing address. And you can go to the county and you can get their mailing address. That's more one by one than pulling a bulk list. Or you can say, give me the list of your whole database in the tax assessors, and they'll actually give you the whole database of all of it, but then you need to sort through it. So more of a one-by-one approach, you go to the county tax assessor online or the GIS map, and you can look at individual properties and get the mailing address.
What is the most underrated benefit of land flipping?
Yeah, I think the biggest thing is, like, when you get a land deal under contract, the seller might live 1,000 miles away, and like the deals are simpler because you don't need someone to move out of their house. If your house flipping or house wholesaling, like, that seller has to move out at some point. You don't have to deal with analyzing a structure. I just need to look at the raw land and make sure nothing's too crazy about it. It's good land. So the ease of analyzing it, I think, is why I love land flipping so much versus other real estate where you have to look at structure, plumbing, electrical, and then even after you buy it, you get burned a lot in structures because you don't know everything. You don't know what's behind the walls. So land, the biggest benefit in my mind is it's easy to analyze once you learn how to do it.
What does climbing the ladder mean, and why is it crucial, especially for those starting out in this industry?
Yeah, I think like when you're getting started in land investing, like the first stage is like, this business model is for me, and making that decision. Second would be like learning a little bit, but then like your goal was to get your first deal. Then you scale up to 2, 3, 4, 5 deals. Then you're making some really good money. You can leave your job. A lot of opportunities open up there, but some people try to skip the first few steps, or they get stuck even like analyzing the business model too much, or in the learning phase, they get stuck there and they never actually take any action. So there's a balance between learning, taking action, but we really want to get everyone to that first deal because then you have the proof of concept that you really need for this business model.
What's important besides patience when it comes to climbing the ladder?
Besides patience, I think some grit, because you're going to have things come up. You're going to have some difficulties in this business come up. We weren't successful out of the gate in this business. It took 3-4 months to really get rolling. And then when it did get rolling, like, it was a snowball fast down a steep hill, essentially. So need some grit at the beginning. You need to be able to go through tough times for sure and be willing to do that. But that's probably the biggest thing from what I see from successful land investors.
So for every $5,000 that you spend on marketing, you expect a net profit of what? $50,000?
About $50,000. Like, we usually 10x our marketing spend.
Wow.
It's very, very normal. We like direct mail when we're doing marketing for the most part. Like, that's what we built our business on. Other forms of marketing that are cheaper are texting, cold calling that you can do as well for this business. But That's 8,000, 9,000 pieces of mail. All it is 2 deals though. Like that's all we need to get. So 9,000 pieces of mail, $5,000 to spend. We're gonna get about $20,000 to $30,000 profit deals at scale. Sometimes you're gonna get a lot bigger though. Like sometimes you'll get an $80,000 profit deal at scale with how much mail we spent. We sent millions of pieces of mail, and that's what the numbers come out at scale. Like we're gonna make $50,000 for every 5,000 we spend. So the name of the game is just spending more on marketing essentially. Like we talked earlier, consistency, sending your marketing, spending money, and then following up the leads. But yeah, that's what it looks like.
Yeah, and it's achievable. How do you define the markets in which to spend this marketing money?
That's the first part of the business. We call it analysis, right? And analysis and then marketing is the second, actually sending them out. And we're looking at things like sell-through rate. How many 5-acre to 50-acre properties are on the market versus how many have sold in 6 months.
Yep.
So you're just making sure what you're buying is going to go through. We look at days on market. What's the average property? How long is it taking to sell? We look at population density. We don't want to be in Seattle, Washington. We want to be 1 or 2 to 3 counties removed from a city like you are right now from Cincinnati, because then you get the rush of the people from Cincinnati who just want to own land, put a cabin on it, put a future house on it, whatever they want to do. Just keeps the market open and the demand really high.
The key is the balance of sellers and buyers. We're not in the middle of Cincinnati, so the sellers are a little more interested in selling their land out here than in the middle of Cincinnati. They know they have something. And buyers, like Dan said, buyers will come from the city. Buyers want to own land outside the city. There's a lot of people with money, especially since COVID. Like there's a lot of people that are trying to get outside of city for weekend retreats, stuff like that. So it's the big balance when you're choosing a market. 2 to 3 counties removed from a main metro area is really what we push though.
And what's the key to your pitch then?
Fast cash. Like we get people cash within 14 days. If they were to list on the market, it might take 8 months, 12 months. They have to find a realtor. They have to pay realtor fees. We take care of all closing costs, and we're going to get you money within 14 business days. So that's the biggest thing, is like, we're going to follow through. It's going to be a smooth transaction. You don't have to worry about anything. And that's why we can buy properties at such a steep discount.
How big is your team today across the portal, the businesses that you guys are doing?
It's about 30 people in general, and that's throughout all the portfolios, from droners to the land business to our other businesses, everything, 30. And we have virtual assistants. We have people here in the US. We kind of have a combination of in-person and hybrid as well.
What's the most unexpected thing that you guys have learned from building and managing a team?
I don't know if it's unexpected, but the interview is the best. You're going to see the best light in that person, essentially. Like when you're interviewing someone, like they're going to be buttoned up, obviously, everything like that. And just having realistic expectations for employees, trying to build up employees is kind of the biggest thing that we've worked on the last couple of years. Having our employees go from a lower level position, moving up in the manager position, everything like that. But for me, I'm like, I never get too high of hopes for someone, because we've had people with the highest hopes and then they haven't worked out in the first few months. So just kind of level expectations when you're hiring someone. Hire based on your core values is really big for us. Your core values should be the opposite of what you hate. So if I hate people who lie, my core value is going to be transparency and like being honest, everything like that. So that in the hiring process has been huge.
How do you guys find investors who are willing to put in hundreds of thousands of dollars into a deal?
The easiest place to start is other land investors, because the cycle of land investing, someone comes in, they want the freedom, they want the money, they build up some capital by doing deals, and then all of a sudden you'll sit there and you have $50, $100, $200,000 extra in your bank account over time, and it's like, how do you put that best to use? So you go out to other land investors who are newer or need deal funding in general, need their deals funded, and you offer to pay for them, and you do some sort of partnership profit split agreement. That's the most common. Other way is it's a cheaper option, and it's going out and getting from friends and families and investors, more like a hard money option. So I'll give you 15% plus an origination point or something up front. But the way you get that, it's hard because they don't know land. So you have to show them your portfolio. You got to treat it more as a business deal, make a presentation, multiple calls. It becomes a sales game to get those type. But really, you just need a few really, really good ones. That's what we did. We got like 2 to 3 very, very good investors for the hard money side of things. And it's a lot cheaper than the traditional profit splits that I was talking about. And then you just sell their deals really fast, and then they have more money, and then they put more money into you.
So from a family investor, for example, who don't do land, how do you convince them to actually get in on a deal with you? Do you have a personal deal that you work on you're willing to share?
Yeah, so our dad became a big investor of ours, and also one of my friends became a big investor of ours. And one, they kind of see what you're doing, and they're building confidence in you over time, because they're not investing the first deal that we have. So they see we're kind of building it up, things are successful, they see that. But the biggest thing is, I like to go in very confident because I know this property is going to buy for $30,000. We're going to sell it for $60,000 in, 60 days or so. And you just show them the history instead of trying to convince them. You show them the data. It's like, this is what we're doing. We'd love for you to be a part of it more so.
The first deal is the hardest with anybody. Right. And then once they get that return the first time, like, when's the next deal? Yeah. Our dad is always asking, it's like, when's the next deal? Do you need my money right now? And then that's the question you get after you really give them a good return. And it's constant in terms of, like, we had so many people who want to fund our deals because how much return they get with them.
What two-letter word helped you guys multiply your income?
Being able to say no to smaller deals. Before we were buying $10,000 deals, $15,000, $25,000 deals, but we knew we had to do 10 of them to make a $250,000 profit, right? I knew we could go after deals and make, $100,000, $200,000, $300,000, $400,000 of profit from one deal. And we found out it's the same process. It's really no more work than the smaller deals. So we just had to shift our mindset, shift our whole business and our operations, get the whole team on board and start saying no to the smaller deals, go after the big and really stay. And the whole idea behind that was just staying precise on what we wanted at that time and just changing our market.
Probably very tempting early on to say yes to every deal, right?
You want to get it all.
$1,000 there.
Commercial deal here, this deal, any deal you'd take at first. And I like that because you learn a lot, but as you're scaling a business, you want to keep the team focused and you get really good at one thing and you can scale exponentially.
What's the fastest that you guys have ever closed a flip from start to finish?
Yeah, so we actually, a lot of times we get referrals from sellers. If we have good experience with sellers and a seller referred, I think it was a cousin or something to us, but it was Tuesday we talked to the seller the first time, Friday she had $60,000.
What's the takeaway there?
I knew the area, we just sold a property in that area, so that helped. Like I knew the demand, I knew we'd be able to sell the property. There's nothing like I overly questioned. We got a drone photographer out there, but there's nothing that like I questioned too much about the property. Due diligence was simple, straightforward. I would have held it up a week, 2 weeks if there's something I was concerned about to get those answered, but there wasn't anything. So it was a really, really smooth process, honestly.
How important is mentorship to your success?
That's how I got started in e-commerce. That's how I got started in land flipping. That's what we still do today. I always find someone who's doing what I want to do, just more advanced, further along in their path, and mentor under them, essentially. Right now, we have a guy out in Colorado who mentors us. He actually owns a supplement company. He's more on the business side, the analytics, all of that. And then we have another company that we go through called SaaS Academy, who we also have mentorship through. But every single thing I do, I always try to find someone who's better than me at it, who's further along, and we partner with them or just go under them, buy their course, watch their YouTubes, and just really dive into their model.
How important is that, especially when you're first starting out?
For us, it's like it expedites success, honestly. You can do stuff by yourself, absolutely. It's just gonna take longer. You're gonna have to learn from mistakes versus someone can tell you about the mistakes that they made when they were in your position.
And then there's the community. You got to surround yourself with other people in the same shoes as you, doing the same thing, on the same path. Maybe they're advanced, maybe they're a little lower, somewhere on your level. Just surround yourself in a community because they've been through it, they're going through it, and you can just get immediate advice.
What if you could build a 100% remote real estate business without tenants, renovations, or property management headaches? Inside the land flipping blueprint, Ron and Dan share the exact system that took them from complete beginners to $667,000 a month. You'll learn how to pick the right markets, find motivated sellers, and use the exact same marketing tactics that will help produce 9 to 12x return on spend. If you're ready to run a high-profit, low-overhead real estate business from anywhere in the world, scan the QR code or hit the link below to get access today. Was there ever a property that you guys regretted buying, and what's the lesson? What's the takeaway in that whole experience?
There's been multiple, but the one that comes to my mind is in Georgia and Crawford County. We bought a 40-acre landfill. So without knowing, it was a landfill. We didn't buy a landfill. We didn't know. We found out after we bought it. And we had such a good deal on it at the time that it still made sense at the end, but the process was awful. But essentially what happened is we found out the perimeter of where the landfill was. We actually bought 2 parcels right next to each other, and I think it was 20 acres and 20 acres. So the landfill was on one of the parcels, but didn't take up the whole other. So we sold them as one and said, you can build on this one and not the other. But the problem was people were calling the county, doing their due diligence, saying, I'm looking at this land, and the county was just telling them, that's a landfill, don't buy it. So it took probably 6 months of going back and forth with the EPA for them to write a letter to the county to tell them that they can build on it. Yeah, separate the two and build on this one. But the learning part was due diligence, right? And that was when we were fairly new to the business model. On the deed somewhere it said landfill. We just didn't catch it, and it happens. Like we've done over 1,000 deals. It happens, but that was one that was very preventable in front of us that we just kind of ignored and didn't catch.
We did make money on the deal because we bought it so well. So we made $20,000 buying a landfill. It was 50 calls every single day of buyers because we're listed so cheap, posted so cheap for the area, 20 acres or 40 acres, and everyone was calling us. Then they were calling the county, and then they're calling us back like, yeah, no, I'm not buying that. So it was a lot of work, but we did make some money, which I guess it's a win. We learned some things.
It was a cheap learning experience,
Yeah.
What's one unconventional tactic that you guys have been taught by someone when it comes to identifying core values?
It's taking what you don't like in people and building a core value against it, essentially. So we didn't like people that kind of sit on their thumbs and don't take action. So one of our core values became action-oriented. We like to be around people who really want to grow and get better and just be better people personally and professionally. So we installed growth. So it's just taking what we really didn't like in our team members and just people around us in general and building core values against them so that we only attract the things that we like.
Like, we're around our employees a lot, and you want to be spending time with people that you really like to be around, or it's just not going to be a great relationship. They're not going to be great for your business. So like, it was huge in how we built it. It was really good advice. We probably got it 5-6 years ago, and we still use it today when we're hiring.
What's the biggest myth that stops new entrepreneurs from diving into specifically real estate?
That it's too late. The boom already happened. The COVID boom. All the prices are too high, right? Everyone says that. That's a huge myth. One, it comes in waves, right? The prices of real estate are going to continue to go up over time. And two, our business model is a little bit different. We're not going after an apartment complex to just rent it out and get a little cash flow like that. We're buying so far under market value in this business that we know we have room to make margins on it. So it's not like we're just waiting for the market to go up in price. We're doing it now, and it's a snapshot of what it is now in the market. But people say it's too late to get into real estate.
It's amazing that there are clientele out there, right? Sellers that are willing to sell at 50, 40% of retail value.
Yeah, I mean,
that's the truth.
Every single day, every single week, like, we find those people. Like, it's just people that are looking to liquidate, honestly. We say land, we make an illiquid asset, land liquid, but with our offers, essentially. Like, it is not easy to sell land. Our offers are really enticing to people because we make their asset liquid very, very fast. 14 days, you can have money. So that's why it really entices sellers and why we get accepted offers every single day, really.
What's been the most expensive business mistake that you guys have made so far? What did it cost you? What's the lesson?
Over-focusing on our systems too early. We needed to be focused on acquisitions and sales and being on the phones with people, things that drive the needle. We built a CRM system, a custom in-house CRM system through a consulting firm, and we did that way too early on, and we spent, I think, $40,000 on this. If we would have taken that money, got a new employee, got some other things, put it in the mail and marketing, we would have seen a much better return. You do have to do that at some point, but it doesn't need to be as elaborate as it can be. You can do a lot with systems for not that much.
You could do Excel spreadsheet.
And that system, like, it was not like we spent too much money on it. We spent, every dollar was too much money. We don't use it. We've never used the system that he built for us.
No way.
So it was $40,000 burned.
Guys, what book changed your business the most and why? And how do you turn insights into action versus just continuing to gather more information?
Yeah, for me, early on in our business, we read the book called Traction. I think it was by Gino Wickman. It's basically, how do you build a business? How do you build core values around your business? And that's something that we still live by today. So it was 7 years ago, we read this book. We wrote down our core values that we're going to hire people based on, fire people based on, promote based on, all these different things. So it's things we live by every single day. And as far as other people reading books and like they take these insights, don't take action, it's just you got to have the stage where you consume and then you have the stage where you take action.
The way we figure out how to and what we're going to take action on is by also from Traction, our quarterly rocks, where we're like, what 3 things are we going to focus on? And anything outside of that bubble, really we ignore for the most part. So it's like, when you think, because too many people read too many books and they're trying to take action on 10 different things, pick 3 things for a quarter, that's 4 months, and just focus on those 3 things. You'll be amazed with how much progress you make.
Say there's an aspiring entrepreneur watching you guys right now who's afraid to take the next step. Maybe he's doubting himself or herself. What's your advice, actionable advice that they can take today to just go out and execute?
I think learn about different business models, like, and then choose a route. Like, if you know, like, entrepreneurship is for me, like, you got to choose what route you're going to go. And like Dan said earlier, like, any route can be successful. So once you choose whatever thing you're going to choose, like, you got to be full force into it and not like think. Some people like hit the first roadblock and then they're like, okay, this isn't for me. You got to get through those first roadblocks. You got to choose the business model first. That's the best piece of advice. And then once you choose it, go all into it.
And don't look behind you. My dad gave me that advice when I was looking. I had like 5 different job offers out of high school. He's like, pick one, go with your gut, and don't look behind at the decision, or else you just say, should I have chosen this business model? It's not work. Because then you have excuses when you hit those roadblocks to get out and go to another business. It's just stick with it.
If you could start today with $1,000, I think people would be really curious to find out, how would you spend that $1,000 to give you the momentum to get the first deal closed?
So getting a list of leads of potential sellers, choosing an area, that's going to cost a little bit of money. And then using a texting software to blast out the sellers, essentially, so to reach the most people. If I said direct mail, we can't reach out to that many people. We're not going to get that many leads. With texting, we can probably hit 10,000 people with those, and it's going to get you your first deal. With $1,000, if you do it right, you can get your first deal and have turn that into $25,000. So I think texting is the best efficiency for that, because you can hit the most people in terms of reaching out to the most sellers.
So when first starting out, low budget,
Yep.
your perspective is texting.
The thing about mail is you could spend $50 or $1,000 on mail and get no results. And we don't want to turn that $1,000 into zero.
Yeah.
With texting, you can reach out to 10,000 people. It's going to take a little bit more time than direct mail. But that being said, it's going to give you your best chance with $1,000 to get a deal.
Want more ideas on getting into the real estate game without having a ton of cash of your own? Check out episode 227, where Ken McElroy shares his no money strategy for building a $2 billion real estate empire. Take a second also to like and subscribe, and we'll see you next time.